Everyone is doing it, and everybody is getting rich. Why not? Everything is going one way, and one way only. Up, 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 and up. Production, sales, bank deposits, brokers' loans, stocks, especially brokers' loans and stocks. Up.
They were dancing their nights away as if there were no tomorrows. At least, none worth worrying about.
But there was one tomorrow that would come that would change everybody's life forever. Early Tuesday morning, October 29th, 1929, started just like any other morning. People went about their business as usual. In the United States, Wall Street opened, just as it had for the last 20 years. The trading floor was a frenzy of activity, except on this day, all the trade orders were to sell, not buy. Not even the experts realized this sell-off would lead to the devastating crash that would plunge the whole world into what was to become known as the Great Depression. That Tuesday affected the lives of millions of people around the world. Prominent traders and businessmen jumped to their deaths from multi-story buildings. The hard-working middle class lost their life savings, businesses, homes, and jobs. In the late 90s, we are again living at a time when volatile stock markets are posting record highs. The speculative frenzy of recent years has driven markets to dizzy levels. The Great Depression is little more than a faint memory, a point of historical interest. Our children are taught it will never happen again. Yet as we stand on the brink of the next millennium, are we entering an age of unprecedented peace, wealth, and prosperity? Or could it be that we again stand on the verge of another Great Depression, only this time one that would plummet the world's great industrial economies to the status of near poverty-stricken nations?
The problems we have in America are no different than what you have in Australia, than what England has, and what Germany has. They're just different numbers.
The world markets are so intertangled. It's almost impossible today for some small sector of the economy to have a problem of any kind without affecting all the others.
The standard of living used to double every generation. Now it's more than 75 years that it will take for our children and grandchildren, meaning they'll never really get to the point that we've gotten to.
Taking that whole middle level of management, that were very good paying jobs, and we eliminated it.
They're out there doing service work for a half to maybe sometimes a third of what they used to get paid for.
We have millions of Americans in their late 40s and 50s now trying to find jobs who were never trained in the current economy.
100 years ago, we were the highest income earners in the world. And now, of course, we're barely in the top half of industrial nations per capita income.
Government statistics and reports coming out saying that the economy is strong and so on and so forth. Our economy is really not that strong.
Government is too big and it's out of hand, and nobody can get a handle on it. But that's translated into taxes are too high, spending is too high, and the deficit is too high.
The deficit of the federal government, which is unconscionable, that elected representatives of the people's government in America would consciously take a nation down the road to bankruptcy, which is what the Congress of the United States is doing today.
The bank says that you can have your money that you've deposited into this account, you can have it back anytime you want. That's a contract. They cannot honor that contract for all of their depositors because most of that money that is put into deposit, they immediately turn around and they loan to someone.
The system is inherently fragile because it's inherently bankrupt.
Nobody wants their money out of a bank as long as they think the bank has it. But if they're sure the bank doesn't have it, that's when they want it.
You could have a number of scenarios. You can have hyperinflation, as happened in Latin America.
You need to protect yourself against inflation more than anything else. We have not solved the inflation problem. When it sparks back up, it'll spark really large.
You'd have to take wheelbarrow loads of these things down just to buy a loaf of bread. So this is called hyperinflation.
Even real estate deflates, and stocks, of course, just get removed.
The implosion of value is inevitable. Sooner or later, there's got to be a correction. And when that happens, it's going to be very disturbing to most investors, not just in the United States, but also in the world.
It's a record period of nearly nonstop advance. And in the process, it has gotten prices to the most overvalued level in the history of the United States. And that tells us that there's more risk than there ever has been before. There's a correction coming in the U.S. stock market. Every few generations, the markets go crazy, and everybody thinks the shortcut to riches is to buy stocks or speculate in real estate. Ultimately, those dreams are dashed, particularly when the public en masse believes them to be true.
Everybody realizes if you keep doing what we're doing, you're going to die. You're going to kill this economy.
It can't work the way it's working. The thing is not sustainable. They're living on a lot of delusions.
Do these key fundamentals compounding together make our economy more fragile than any other time in the history of the West? Clearly, our economy today is very different to what it was before the last Great Depression.
You must remember that our money was still backed partially by gold. So when people had money, they had something of value. The productive base of the country was still intact.
60 years post-gold, 60 years post-silver standard, you know, those things don't circulate anymore. We've had 2 generations of people who've grown up who don't understand anything about gold and silver.
It's interesting that it wasn't that long ago that America was the world's largest creditor. And today it is not only a debtor, it is the world's largest debtor. We're living on our borrowing power.
The big question is when and how it's going to evolve.
There'd be panic. People would start hoarding what money they had, and so commerce would unnecessarily contract because of the psychological factor.
I don't see how we can avoid a financial collapse at the rate we're going.
We're kind of like the drunk that's been on a binge for a long time. We're going to pay. There's going to be a hangover of some kind.
Whether the fractional reserve banking system, government securities or bonds, or just the hope that the stock market will continue to rise forever, or maybe the realization that we are completely devoid of real money. All of these fundamentals are maintained entirely by confidence. But confidence is easily shaken. Speculation abounds as to what will trigger a loss of confidence. But in reality, on the day that people awake to realize that every aspect of our financial and economic system is frail, the resulting crash in confidence will domino affect every market and every aspect of our fragile system. Yet this crash is to come at a time when our interdependence and reliance on the system for our day-to-day survival has never been greater.
We are less positioned today to sustain a disruption of food, water, power, or police protection, what have you, than ever before.
The crunch that's going to come when the government will have no more money left in this country to be able to look after the people.
The kind of turmoil that's forthcoming could be far more substantial than even the turmoil of the early 30s.
When they look at those IRAs and the value's gone down to half or a third of what they had, they're going to be mad and they're going to come out with blood in their eyes looking for a scapegoat.
It will not only wipe out the middle class, but it will also wipe out many, if not most, wealthy people.
The one question that really remains is how can we protect ourselves, our loved ones? In history, those who've seen the inevitable storm coming and prepared for it have been able to survive, and in most cases profit greatly from it. Man's high regard for gold and silver has always caused him to return to it in times of political and economic upheaval. Holding some gold and silver is again today the #1 preparation strategy.
Gold is the only real money. Everything else is just a promise to pay it. So if you want real money, you should have it in gold and silver, in precious metal.
Gold has been for 5,000 years our standard for value. #1, because you can't print it.
Many people hold gold as a currency or a medium of exchange under times of severe civil unrest and crises.
This vast undervaluation, and when that pendulum swings back the other way, it'll go way out the other way. The eventual price of gold is not going to be $400 an ounce or $500 an ounce. It's not going to be $1,000 an ounce. It's going to be $20,000 an ounce or $25,000 an ounce or $45,000 an ounce before it stops.
Whenever there's been a crash, gold and silver have always gain in value.
You will be able to acquire anything that you want to if you have a supply of gold on hand.
When things start to crash, if inflation takes off, then people have enough recent experience with gold and silver reacting positively to higher inflation rates. So there will be an immediate run toward these metals.
And when everybody tries to rush in there at once, the price has to just skyrocket to clear the market.
Panic. 16.5 million shares of stock sold in a single day.
Over 6,000 years of recorded human history have painted a grim but provocative picture. The civilizations that have risen and fallen tell an age-old story. That when the time-proven principles of sound money and economics are abandoned in favor of valueless currency, uncontrolled spending, and crippling debt, without exception, the civilization and its unsuspecting people always pay the full price. But from the ashes and ruins emerges a new era ruled by those that were prepared, a golden era. A new millennium. The choice is yours.